Yeah, you can start, Vetri.
Okay. All right. So this is a DeFi presentation. I know most of you would know what DeFi means, at least it's decentralized finance. Let me move on to the next slide. So I have this slide. I wanted to start talking about the Bitcoin, right? This is kind of where all the DeFi started, no? So we had a good session with Muthu, like 2 sessions on Bitcoin. So we're not going to cover Bitcoin here, but that is the starting point for the DeFi. That's why I want to call the Bitcoin as a first generation blockchain, right? Where it was like a decentralized currency was introduced. We all know about the peer-to-peer currency, right? And after that, like Ethereum was built, right? So Ethereum was kind of a start of the decentralized finance. It is, I call this as a second generation blockchain because this is a kind of a programmable blockchain, which is kind of next level to what Bitcoin has been built. So when Ethereum was built, they made it as more programmable, which enables the developers to kind of build the dApps. They call it as a dApps, which is a decentralized apps, which is a kind of a beginning of the decentralized finance. So most of our examples I'm going to talk about in Ethereum, but it is in Ethereum is not the only blockchain which has the DeFi on it. There's like multiple blockchains are there. I have one slide to talk about Solana a little bit, but there are other layer ones blockchain came after like Ethereum. There was like similar DeFi's there. Any questions so far?
So,
Guessing this is like introduction.
yeah,
Everybody
if you
would know
guys
this, right?
are not talking, please go on mute. There is some background noise. That is one thing. And also, Vetri, maybe some of the people may not be too familiar with what is centralized, what is decentralized. Can you expand that also?
I wanna. In that case, I won't go back to this slide and come back here. So centralized is what we have. It's traditional finance, right? So where you have a bank, you have the intermediaries like bank and government are there for the financials. This is a core banking system. This is what we have traditional finance we have currently in place in infrastructure, right? So if I go back up here, decentralized finance is the financial systems or services that was built on a blockchain that has no central authority. Right? There is no central authority for decentralized finance. There is no bank in between. There is no government in between currently. It is all run on the blockchain. Right? So any banking or any finance services they built on the blockchain, they have this set of pre-governance governance rules, which is built in within the dApps itself, which are called smart contracts. It is kind of a programmable decentralized apps. And I put this trustless and permissionless here. Trustless is nothing but there is no trusted authority in between, right? There is no bank. Like when we do borrow in the decentralized world, when we do a borrow or lend, there is no bank or there is no Wall Street or there is no government is involved, right? If there's a software is built called smart contract is built, and that enables us to kind of lend money peer to peer, right? If I wanted to lend money to lend some crypto to Nari, we should be able to use kind of one of the Ethereum smart chain. I should be able to do that, right? That is what trustless means. And permissionless is kind of there is no KYC. You don't have to fill a lot of paperwork here. All you need to set up your wallet, right? Then within your wallet, you will be able to do any kind of financial transaction.
Vetri, I have a quick question. Maybe I'm new to this. Suresh
Sure.
here. So is there a legal binding? In other words, will this hold good in a court in case of any dispute?
No, not this time. So
Okay.
that's where I have this cons here. So it is like your responsibility here, not at this time, right? I don't know how the court works. If let's say if I get into contract with you, right, and I say I would, I lend you money, right, and if you don't pay me an interest, right, if there is can I take you to the court? I don't think this is possible at this time, right?
Okay.
That's why this is there's legal matters to this whole DeFi is more complicated. And it is very early stage right now, but it is evolving. At some point, the legal will be getting integrated into DeFi. I don't think it is available right now.
But at the same time, what you're saying is the peer-to-peers are working with some kind of whatever the built-in contract is, correct?
Built-in contracts, yeah. So though they call this a smart contract, is not. I cannot sue you if you don't pay me. Soon, right? So, but generally, this contracts would. I took a simple example there. This contracts it automatically will. It's built in. It's automatically will move the money from your wallet to my wallet if we get into like borrowing, lending situation there. But if you refuse to pay it, if you empty your wallet, right? There's nothing the the smart contract would not do anything about it.
Got it. Thank you.
Right.
Yeah, I think that is a big difference, right? So if there is a contract dispute, then you have a civil court for the traditional finance. So if there is a dispute in smart contracts, then there is no centralized authority, obviously, right? And also there is no judicial authority.
Right.
Is there any development in the legal framework to suit this? Because this can promote swindlers and fraudsters, right? So
currently this is all like happening online, right? If you this will come if you have a real world transaction. If I buy a car from one of you, right, and I transfer the cryptos to your account, if you don't hand over the keys to me, then it is a problem. That is not covered with it. It's currently these protocols are happening within the network itself, right? It's all digital, right? So that is working fine for now, but I don't know how this when it kind of evolves to the real world situation, like when we sell a car or if we do any product, how would that work? We still don't know, right? At this time, I don't think it is there. I don't have somebody else in the.
Just to understand from the other end of the spectrum, supposing I put something on eBay, right? And you buy. Either I am not giving you the commodity or you're not paying. Let's assume that. Let's assume all the negative paths, right?
Right. Yeah.
Is this one shade better than that? In other words, is what is built in here, is that holding both parties tightly than an eBay sale?
This is better than eBay, right? As long as it is digital, it can be controlled within the smart contracts. Then it is this is whole scale, right? If anything goes beyond your digital world, then this is not there yet.
Got it.
Hey, Vetri, can you give maybe one or two examples of what a smart contract is? Because from what I'm understanding so far, it's the blockchain is basically recording a transaction, which is kind of cast in iron, right? Anybody can see that.
Right.
But what's the contract part of it?
Okay, so this is a good place to get into here, right? So if you see the right hand side, this is DeFi architecture, right? Infrastructure. You see the blockchain. That is what he talked about. That is your base layer here, where your ledger is there, the accounting is there, and what you said it is transparent is there in the top, right? It is the block explorer, right? Whoever any transaction is happening within the blockchain that can be explored during the on the block explorers here, right? So, and you see the next layer is nothing but your node infrastructure and consensus. Consensus we know, right? This is like it could be a proof of stake or proof of work, right? That is the consensus algorithm, right? And if you see the application layer, this is your smart contract. What you're talking about here, right? So there is a decentralized exchange. Let's talk about this. This is more like we all know about stock exchange here. So they have built a decentralized exchange here. There are a lot of examples, which is right like FTX is there. There's a lot of decentralized exchanges have been built. That particular, the whole decentralized software is nothing but your smart contract, right? Where they will take an order, it will match your bid ask price, and it will kind of swap the coins within the decentralized world. That is the whole function of that end-to-end, right? To the transaction, that is nothing but your smart contract. That is one example, right? Similarly, this lending, you will say if you want to lend like 1 Bitcoin to somebody, the smart contract is going to check, do you really have that 1 Bitcoin in your wallet, right? If you don't have that in your wallet, it's going to say you cannot lend it, right? That kind of algorithm, and then it gets to the other person's wallet. They will check the other person's wallet if that is a valid wallet or not, right? Those are all like it is kind of a program which is built within this blockchain. That is nothing but it's called the smart contract protocol. Does it make sense?
So
yeah,
no, that's good, Vetri. So I have a couple of questions.
Yeah.
One is like, the software development, right? See, all this runs basically on software.
Right.
So this is all developed using the open source concept by many developers free of cost, or how does it work?
Everything is open source in blockchain. I've never seen any closed response, or even from Ethereum to, I've never heard any closed. So it is all open source. Like every company, I want to just call every entity, right? Like Ethereum has Ethereum Foundation. They have their own developers. They have hired their own developers. They develop like their own developers. And if you build any smart contract on top of it, right, like take FTX for XXT exchange, for instance, they have their own developers, right? There is an entity is there, but whole this whole transaction, everything is being done decentralized. And if you want to get access to the code, like every blockchain company, right? I've seen the code is open, right? There's GitHub is there. If you go to Coin, what is that? Coin Market Cap or CoinGecko. If you go and look for any company, they have this GitHub link there. So if you click it open, you should be able to see their code. And most of the code, there people are like using that code. We can talk about that as you go, right? They call this forking. They take like Ethereum code and they build like tweak that code a little bit and they kind of use their own block. So that's how the Dogecoin is built. Right? I thought Dogecoin is built on top of Bitcoin. They took the Bitcoin code and tweaked that a little bit and they kind of forked the Bitcoin code and they came up with their own Dogecoin.
So
does it mean that somebody can modify the code in a negative way?
It is possible. Those are the risks we have, right? We can talk about it as we go by. So if I build the code and if somebody smarter than me looked at the code and they could find some kind of a loophole or some bug in it, and they can certainly take advantage of it, right? They can exploit that, certainly. So that's why they have a lot of artists that I think we're getting it. So I have that.
Yeah, that is a totally different dialogue of open source versus commercial software, right?
Yeah.
So
right.
I think there are definitely advantages and disadvantages of open source versus commercial software, but open source has been proven as a successful thing, right? So you can have vulnerabilities, but the idea is there are more eyes on the code and they will spot the vulnerability so that they can be quickly fixed, right?
Yep.
So Vetri, I have a basic question.
If some advanced coder finds the vulnerability and does not share that, they can definitely exploit it. Yeah. So
Vetri, I have a basic question. So you have a payer and a payee, right? So and there is a service of the money moving, or it's in an IOU status. So where is that service coming from, and is there a payment for that service? How is all that happening?
Phase service you're talking about. Okay, yeah, we'll go through that, right? I have some examples down there. Okay. Let's get to that question at that time.
Yeah.
Okay.
Before that, in this slide, can you explain the synthetic assets? Are you talking about NFTs or something else? Or?
No. Synthetics is not NFTs. Just hold off on that. I have one more.
Okay, very good.
Slide. I have kind of explained that. I will explain that there. So before we get to the synthetics, I want to you to pay attention to the oracles here. This oracles is not our Oracle database. This Oracle means it is how it is a software again. It's how it communicates with our traditional financial infrastructure. If you want to bring some stock prices, what is the current stock prices? You manipulate it. If you wanted to bring like what are the things like bond prices? You want to use that for your protocol. This one it communicates to our traditional world outside. It could be financial world, or if you wanted to connect to any other health service records, this oracles will do that. So these are all like it's part of the DeFi structure.
So how do they get paid, the oracles?
Oracles, yeah. So everything is all cryptos, uncryptos. So we'll come to that. Okay. So it's all the same answers the same question which we had before. Okay. All right. Analytics here now we can run analytics on top of the block explorer, and this application layer. We talked about DEX, lending. We talked about stablecoins. I'll come to that. Yield is yield. I don't know what the alt is. I don't know everything here, but we can talk about like, of course, insurance is there. So these are like application layers and different. We'll come to some of this like more detail in upcoming slides. I want to go back here. I want to talk about the pros and cons. We talked about some pros and cons already. right? The pros is there is no central authority. That's mean there is no your corruption is less. Like you would not be in a situation where in 2008, like there won't be much mismanagement, right? Everything is controlled through the software, through the smart chain. And quick access, you have quick access here. We talked about permission list. We talked about the peer-to-peer financial system. Immutability, we know this is a kind of blockchain concept, right? They would not go back to rewrite, delete, or update any of the records here. That is in immutability. And transparency, of course, when we say transparency, we're talking about like every transaction is in the ledger. Like this is a Bitcoin concept here. And tokenization, this is where like you're like, how are they getting paid? Like they are getting paid on the token, on the token, right? Every software has their own token. Every smart contract, every Oracle has their own native token, and that is how they get paid, right? We'll come to that. Like, I want to hold on to that. Okay. Cons, we talked about it is still nascent. It is still very early. And there's a lot of uncertainty. We talked about some uncertainty already. It is highly volatile. We know that. Scalability issues are there. We know Ethereum, Bitcoin, they are about the Lightning Network now. Ethereum is moving to Ethereum 2.0, and as this space explode, right, the scalability issue will be there. But I think every company is working on that. There is a possibility when any new token is introduced, there will be less liquidity. The liquidity issues are there, you know that. And the low interoperability, right? So currently, most of the blockchain, they can stack on top of that, but they cannot talk to each other yet, right? So there is a interoperability. If they wanted to have like one DeFi built across Ethereum and Solana and Cardano, it is not possibility here, but I hear a lot of companies are working on interoperability. But at this time, that's why I say little low interoperability. We talked about the hacking vulnerability and cybersecurity risks are there. And finally, it is your responsibility, right? That's what I said. Like if you get into this world, there's nobody else to back you up. You have to understand the risk, and if anything happens, right, you got to take your own responsibility. I want to move on to the next one. So the stable coins is like I don't know how many know about the stable coins. Stable coins is a very important concept. This is with the advance of stable coin, that's when the DeFi got exploded. Okay, so we talked about the volatility of any cryptocurrency here. Like native Ethereum is very volatile. This may not be suitable for like borrowing, day-to-day operations, right? So for anything. So that's why the MakerDAO protocol introduced something called stablecoin, which is DAI, which is kind of back to any fiat currency. Like it can, the DAI can be pegged to DAI USD will be pegged to USD. It is like it will have this. That's why it's called stable. It holds up the stable value of any currency. If DAI British pound will hold up the value for their British pounds, and USD will they have like for almost every currency in the world, they have like equivalent stable coin built, right? And this stable coin is kind of the heart of all the DeFi, right? If we do most of the borrowing, they kind of do that through the stable coin. So it is becoming kind of a core for DeFi, all the DeFi process. That's why I said this here. And every blockchain has it. DAI is the only one example I gave here. So there are like so many stable coins out there. There's a USDT, USDC. There's no every blockchain there are some blockchains have multiple stable coins they have invented. Questions on stable coins?
Hi, this is Anurag. Can I ask a question?
Yes, Anurag.
So you mentioned that there's stable coin for each currency. So for example, obviously USDC is Circle, right, for USD, but assuming that there's a stable coin for rupee also, for Indian rupee.
Yeah, this should be there. I don't know what that is, but it is there, yeah.
Can you trade USDC with a Indian rupee stable coin? And how do you do that? Are these closed systems?
Yeah, it is possible. So that's where the DEX come into play. So every DEX, one example is FTX. I go back to FTX exchange. They have the trading pairs. Okay, It may not be there in all the DEX exchanges, but I'm sure you would be able to find one of the DEX exchange will do the trading pair. They call this a trading pair where they would swap to one to other, right? So that is kind of, you can do that for you BTC to.
Do you lose value? So do you lose value in that?
Yeah, I cannot answer that question. I have not done that, so I don't know. There may be you may lose value there. But it is possible.
And which one? I mean, can you give me a couple of examples as to which are the DEX exchanges?
Okay, all right, let's go here. I put that here. So I have listed two here, KuCoin and FTX. This is a very, very famous one.
KuCoin and FTX, okay.
FTX. To your point, it is possible. If you ask me if you lose value, you may lose value, but I cannot be sure unless I've done that, right? So I never done anything with Indian INR. Like anything I've done is only with the USDC.
Yeah.
Very little of time.
So China banned even the stable coins, right? Or
yeah, that is what I'm not sure. They keep saying Bitcoin. I don't see that. Did they ban the whole thing or just the? I don't think they would have banned the whole thing, right? They wanted to come up with their own coin, right? They have built their own CBDC. If they ban the stable coins, I think they're banning themselves, right? I think I'm not sure, but I think they ban only the crypto and the Bitcoin and the crypto mining operations there.
so that is another question, right? So because there is no centralized authority, how are they enforcing the ban? Like through the Great Firewall of China, or is it just legally? So they are saying you should not deal with cryptocurrencies and DeFi.
Yeah, I think that is you should not do mining or you should not own any Bitcoin. I think that's most of the mining operations moved out of China now. So all those people are buying that second-hand computer, second-hand like mining rigs now to move to a different country, and they're trying to mine it from a different country. But if you do any transaction peer-to-peer within the China, I think that's illegal now. I don't know how they track it, but that's illegal.
And I believe the way they are controlling it is that you can't convert your Bitcoin into fiat currency, right? Their banks will not do it.
Yeah, bank would not do it. Yeah, there won't be banking be there. I don't know. So there's too much there, right?
So the stable coin means that it's directly backed by a gold reserve, is it?
It is not a gold reserve. So how they build this stable coin, if I understand this correctly, let's take one example here. What is so USDT, the Tether, right? Tether got into problem just now, right? That is Tether company. So they're supposed to, let's say, if they issue a $1 million worth of stable coins, 1 million stable coins, they're supposed to kind of over collateralize. They have to give at least, like, I'm making this 20%, at least 20% more of like US dollars in their reserve currency, in their currency, right? They got to hold that in their portfolio.
So they'll hold. Okay, I got it now. Okay,
right. So they got in trouble because they got exploded so much they couldn't keep up with that over collateralization. It got under collateralized. That's when they got into problem with SEC. Okay.
That's almost like a local inflation, right?
yeah. This, if we really think about all this appreciation here in DeFi, it is all kind of inflation only, like inflation appreciation only. Okay. The next point, some of you may know this is staking. I added the staking. Staking is not really a DeFi concept, right? So staking is like a consensus mechanism. But I put this here because I've seen a lot of DeFi protocols kind of integrate the staking along with their DeFi protocols. That's why I included the slide. Staking, if you own any coin, right? So you will be able to get rewards by participating in their ecosystem, right? So it can be part of their ledger writing, right? So if you have, if you say, I'm going to use my coins for, let's take one example. I'm part of this, the last one, the ADA. Right? I own like a lot of some ADA, long-term ADAs. I've given this to staking to this farm here, Milo farm. What they do, like they've pulled all this Cardano to their own, then they kind of lend that for the staking. And in turn, the Cardano will give us like for every block we write, we help them to write, they give some kind of a rewards back to us, right? So there are multiple ways to do the pool. Like I can see all the exchanges have their own staking pools. You could have seen that, like Coinbase has its own. I think Kraken has its own. And there are like a lot of private staking pools available. You can do that, right? So if you really want to hold if you really believe in any of the cryptocurrencies and you want to hold this for long term, you certainly want to look at like staking as an option here for individual. Like every crypto has its own way of staking them.
So the risk here is suppose if Milo farm goes bust.
Milo farm will not go bust, right? So this is so let's say I'm starting up a staking pool, okay? And I think ADA needs about like 3 million ADAs to start really writing up blocks. That's minimum, not minimum. That is how does the current protocol works. So until I get like people to contribute to that farm, if I get after 3 million, up to 3 million, then it will start writing, and I will be getting. So I wouldn't go stake. If Cardano itself nobody uses it, if that goes bust, then the whole staking pool, like the whole blockchain of the Cardano goes, right? I would not go think the individual farm will go, and then maybe somebody will be contributing, somebody is taking off at some point. If I lose interest, if I don't get to the 3 million after that, at some point I got to give that back. Right? If I dismantle that, there should be a way there. Cardano will enforce that this ADAs will be returned back to the owners.
Okay, so what happens if Milo farm gets hacked and they steal that? Are you still assured by Cardano, or you lose your stake?
No, I don't think it is. Milo farm, it's run by like really a good IT guy. So I know him. So I don't think he will get burned. But that the hacking risk is there. If it is there, I don't think Cardano would do anything unless you buy an insurance, which we'll talk about. There is a decentralized insurance.
Okay.
Then the insurance will cover that. I don't think Cardano Foundation will cover it, because this is, as you can see, run your own. If I run my own validator node, that is my responsibility to make sure that validator node is not hacked. So this is basically, you can run it in any server. No, the validator nodes can be run in Azure, AWS, or we can run in our own PCs, right? It's possible if my PC get hacked, and if somebody takes all the Cardano for the staking, it is a risk on me and the investors who have done that.
So
what kind of
what is needed
return can you
for
expect?
running the validator node? Are there standard things that you just run, or does it need any coding skills?
Oh, that it needs coding skills. That's why, as I said, I know this person. He is very tech savvy. He's very tech savvy. That's why I kind of trust him on running this code. He took some time for him to set up. I know that. So he was giving some updates when he started doing that.
He's running. Your friend who runs Milo Farm runs the validator node, or you don't?
He's the one who's running. Sorry, he's running it in his Azure environment. He has spun up a server where he set up all this securities in place, and he's the one who's running it.
So what is his? How does he make money?
He is a strong crypto believer, strong ADA believer. So this is his passion basically. So I don't know how he makes money. Of course, he is in crypto world, and he does IT job as well.
Okay, so he does no, like, see, when you are getting rewarded, right, for staking.
Yeah. And right. he has contributed maybe $1 million to this Milo farm. He gets that
co-investment, right?
It's kind of his own. Somebody starts their own hedge fund, right? They put their own money on the hedge fund, right? It's kind of similar to that, right? So if hedge fund performs well and they perform well, it's not that he's getting the ADA from everybody else. He has put his own ADA into that. If I go and look at, I can look at the analytics there. I can see how much the I don't know, operator. I don't want to call this operator. There's a word. So how much the operator is right? We can see that reports in the blockchain. I could see that. So he's the more he has the more contribution to my form than others.
Okay. Vetri, is hacking the only risk in staking?
All the risk we talked about earlier, it is there for right? Okay. Yeah. So it's everything is there, right? So the scalability,
supply and demand, right? If people are against Cardano, then you lose.
Correct.
Yeah. Okay. Yeah, that is also there, right? Yeah, that's also you have that low liquidity, low.
Okay, got it. Okay.
So those risks are kind of. Sorry, what is that?
What's the advantage of staking?
Oh, so as I said, right, if you wanted to, if you are a believer of Cardano or any crypto and you want to, there are a lot of people hold this Cardano for years. And instead of sitting in your Cardano sitting there in your wallet, you can just start taking so that you can get that 5 to 6% rewards.
Okay, so you're getting
and you're contributing to the network as well, right? Blockchain as well, right? I mean, if you're really passionate about that, that means that gives us some satisfaction that you're contributing to the network.
And you get the rewards every week, right?
Yeah, it's every week. Yep.
And you can withdraw any time, or is there a lead time?
So that you have to work with the operator, right? So generally, operator they'll say you don't want to take that out within. It is Cardano doesn't establish that lead time there. So the operator pool owner would do that, right? So they would say, okay, don't take it out within a year or so, something like that. And the rewards will come in. You can use the rewards anytime. The one you already pledge in for the staking, that you will not be able to take it out.
Okay. So what about Binance and the BlockFi and all that? Same thing or different thing? They have staking, right? They also give like 5% or something.
Yeah. They have the exchange staking pool. That's why I said participant. They can do that, right? So I'm not participating in any of the exchange staking pools, but every exchange has its own staking pool.
Okay, thanks.
So every Cardano, every ecosystem makes its own rules, is it?
Yes, every ecosystem has its own rules. I just put this example here. For Ethereum to really participate in staking, it is 32 minimum of 32. This is an example, right? Cardano says no minimum, but it's you really. Okay, in reality, it's 1 million. It's 1 million. It's not premium. So in reality, you need at least like 1 million ADA to start 4G blocks.
Okay.
I mean, in terms of the risk, the operator of this staking pool technically can take away your they have the full access to kind of your ADAs then, right? So if they want to run away with that, they can technically.
Yeah. So there's two things here. The Cardano is actually it's a delegated proof of stake, which means you are delegating to him or her to do it. I don't think they can take it up, but the Ethereum have that risk there. Ethereum is not delegated proof of stake. That means you have to transfer your Ethereums to their wallet. Their risk is more in Ethereum than in Cardano. Cardano, there should be, if you are delegating it, I don't think they can take it up. There should be a governance mechanism there.
Okay, so you're not exposing the keys of those the wallet. Right. Okay.
Yeah. All right. So
what kind of rewards do you expect? So let's say if you put in $100,000
5 to 6% generally. That is expected
per month.
5 to 6% is per year. Per year divided by that per week. That's how you get the rewards.
Okay, thank you.
So if anybody wants any interested to talk to that person, let me know. Right, if you have the Cardano investor long term, I can connect them with them. Then you can talk to me. You can ask me questions too. All right, DeFi services we touched upon a little bit here. So the DEXs we talked about decentralized exchange, and it allows you trade with no central authority, no KYC. The KuCoin and these are just an examples I put it here, and there are much more than I'm not making recommendations. You can just go and look at it. I didn't have a chance to look at like in deep into each and every services here. But I just try to put this like this is already there to show you this is in motion, and you have there are multiple protocols there in different networks. So just want to give you an idea here. Borrowing lending is pretty simple, straightforward. You can lend any of your cryptos, Ethereum or Bitcoin. In turn, you will get some percentage back from them on a weekly or monthly basis, depending on what the protocol is. And they kind of borrow from you. They lend it to somebody else. You can also borrow from some protocols. Some people do it. I don't know why, but they do it. We talked about the insurance. There is a DeFi insurance in this world, like will cover you from hacking. And the Nexus Mutual is like more you talked about insurance company. I don't know how they work. And people say for this hacking risk, other risk, they can take the insurance. But I really don't know how the real case scenario would work. Somebody hacks, do they go through a lot of red tape there, hoping there's no red tape. You have to just submit the claims and they have to give it. But I don't know how that really works. But there's an option there for us to get covered there. The next one is the DeFi derivatives. They have the margin trading. There are option trading. Currently they have like Bitcoin options has already been introduced. And I think it's 1:5 margin trading is there currently for Ethereum and Bitcoin. You can look at these protocols. They're like DYDX is the margin trading platform, and OPIN is like option trading. I looked at this OPI one. They like our option trading. They have puts, calls. They have everything. It looks like the similarly like you're trading like in the TDM trade, but I never tried it. So there's options there. So synthetics, right? This is what Mary asked before. So what is synthetic? It tracks the value of the underlying assets without the needing of the hold of hold of the asset. Right? So when I say there are a lot of protocols using a lot of DeFi protocols using the real world like Apple shares price to include in their protocol. So for that, they need this Apple price. And based on their Apple price, they kind of increase their yields and interest. I really don't know how they do it, but they kind of need that Apple price. Like you can buy a synthetic Apple stock within the DeFi world, and that will go up if your actual Apple price goes up or goes down, Apple price goes down, right? So, but the Oracle enables to kind of track those prices, but you're not owning the real Apple stock, right? They would not, so we can buy it and sell it in the synthetics world. I don't know if I explain that correctly. That is what synthetics, which is kind of a synthetic stocks or synthetic bonds or any other synthetic gold is also there within the blockchain value. We would not
even stable coin is some sort of synthetic, right? Because your underlying, say, a US dollar, you have the USDT or something. Is that
you can say that. Yeah, I never thought about that.
Yeah, but for the stable coin though, the issuer has to hold that. That's where the capitalization, like the requirement comes from. Is that the same case here with the synthetic?
No, this is not. That's a difference here. This is now requirement here to stay because it is. They are using the synthetics price movement to kind of use that in their protocol. But I don't think there's a requirement here to they have to hold the Apple stock or any other stock, Google stock here.
So why wouldn't the stable guys do the same thing as opposed to actually holding the fiat in that case?
Yeah, stable is, I think it does go through SEC regulations. Synthetics and all is part of within DeFi. It doesn't go to the SEC regulation.
Oh, okay.
So one thing which I don't understand is borrow and lending. I mean, in a conventional world, right? The bank, you borrow from bank, and the bank borrows from somebody else, right? But they the margin. So the bank, I'll go and put in, let's say, $100. I'll get 1% interest. And then bank will go to, let's say, Vishal and give that $100 at 2% interest. And that's how they make money. But in this case, how when you when you lend your crypto to a third party, to an organization, or to an individual, why would you, first of all, why would you lend that? And why would you borrow it? Because you can always buy it from the market. And
Yeah,
then
so you
how
can
do
see
you
that
make
in
money
here,
out of it?
right?
Or
Or
out
even
of
this
the
my screen here.
transaction?
I went to the compound protocol here. I know I cannot show you that, but at least you can see that here. Let's take this example here. Like maybe Ether is a good example. Ether, right? So this is like, if you lend to them, right, they are going to give you 0.09% interest. But if you borrow from them, they're going to give, they would charge you for 2.77, right? As I said before, right, I know if I own Ether, I maybe instead of sitting there in my wallet, I would like to get this 0.09% instead of 0%. That's good. But I don't know why people would borrow from them. But there are people borrowing it from DeFi protocols here. So this is all not in traditional sense, right? I'm a crypto investor or maybe crypto world. I wanted to get this in a lower interest rate. I may make money, but I may borrow it from here.
I mean,
So
besides
maybe
like the
they are
staking,
borrowing for shorting the currency, right? So in the futures market, you can short say Ethereum or Cardano, and then so for that, do you have to borrow? So is that like that? Like in stock market, that's what they do.
That's what they do. Okay, I really don't know why would they borrow here. That could be one of the reasons here, but you can see the spread here, right? It's a spread. They're lending it for more and they're borrowing it for less, right? So that's how they make money too.
Right.
I mean, they could also be doing it like because they're not going short, like they're actually going long. That they just want to like, it's kind of like you trade on the like based on the margins, right? So I mean, I heard that's how the exchanges who give you the interest, they actually are then giving or like allowing them the other large like the institutional investors to actually borrow that, and then those investors then they borrow and like they sell and like they make money because like kind of they're going long, and that's how then they're able to give you the interest. So this is like besides like the stake pool, because not all the cryptos like kind of they follow the staking, right? So the way that these exchanges give you that interest rate, I think, is like based on this too. But this sounds more like a P2P, not like the institutional investor. This is more like the P2P borrowing, right?
Yeah, this
Correct.
is not
So if you're long, and if you're borrowing, then you have to return it at like appreciated value, right? So I don't know whether it makes sense.
No, I think it's like margin. So you take a loan basically, and then you sell it basically. I mean, you use that to sell it like the higher value basically.
Unless they have some other exchange where they get even higher returns, right? So they borrow at 2% in this exchange, and then they lend it to somebody else at 3%. They can do arbitrage.
Arbitrage, yeah, arbitrage is very popular here. A lot of things are happening here, so that could be another. That's as we speak, I think about that. Right? So that could be another thing they could be doing.
So I have a basic question, Vetri. So I mean, the endpoints are basically US dollar or some actual currency, correct? So how does this, I mean, this whole world exists outside of the taxation world?
I want to say yes and no.
Is it a delicate question? Okay.
Yeah.
No, it's not really delicate. You are supposed to pay tax on all these things. That is, government is really, they are going to be coming out with more and more regulation saying that you have to declare all these things, in all the forms and everything. So they are asking Coinbase and other exchanges also to give, the
Yeah, how would IRS would know that? Yeah, how would IRS would know that I'm getting like 3.04% interest in the DAI here? There's no way they would know it unless Compound goes and reports it. I don't know if they're reporting that. This is outside the world. Coinbase would do it. Like Coinbase and other crypto exchanges would do it, but I don't know if the decentralized services is really reporting to IRS, right?
Neither does this governance itself enjoy any tax benefits.
IRS will definitely get into this at some stage. Right. So because they are losing money on this.
Yeah, it is fastly evolving. Like before, like 3 months later, there's new services here. I don't know how IRS is going to keep up, right? SEC is just talking about stable coins, which was like came in like 3 years ago, right? So these are all like two more complicated subjects to them. I don't know how they're really going to do it. They cannot keep up with this.
True.
Unless this whole thing crashes, there's nothing there. That's different story, right? So, but it is fastly evolving. Okay.
Right.
Hey, I have a question about borrowing. Can I ask Anil here?
Yeah.
So suppose I borrow the money at 2.2% and withdraw, convert it to cash and use it for some other investment. Can I do that?
Yeah, you can do that. But
so then how is that assured, like my 2.2% is not going down the drain in this?
So you're borrowing the money, you're borrowing here and you're converting into USD, right?
Yeah. And then I don't pay it, or I just use it, spend it somewhere.
So you basically don't return. That's what he's saying.
Yeah.
Yeah, I never thought about that scenario.
So I think the smart contract will probably come into that, or
yeah, smart contract will take it, but if you drain your wallet, right? So smart contract will take the money away if you have a wallet. What if you didn't pay for it? What happens there? I don't know.
So there may be. So there is no collateral.
There's no.
Yeah, the only thing that exists is the blockchain, right? It's ledger entry. So
yeah, there must be something there for collateral. I don't know what that is. Okay, I never tried that.
I'm sure they check your reputation and other things before they give you money.
Correct. I think that's the only thing that holds water, because you're not keeping any kind of asset into this, right? So
yeah. All right. Next one is kind of a yield farming. They call it yield farming. This is where, like, I wanted to answer those questions, right? How do they get paid, right? So let's take this example here, the decentralized exchange. Right? They so every protocols I mentioned here, they have their own native tokens. KuCoin has KCS. Okay. KuCoin has kind of a KCS token, and FTX is FTT token. And they get kind of, their revenue comes on the token sense. So as we go do that, that is where their revenue is. So as you participate in their network, they kind of give you some kind of a yield in terms of that particular token. That is called the yield farming, right? This goes back to even for the Oracle we talked about Nari. So Chainlink is one example there. Chainlink has a link as its crypto. When they do more transactions, it generates more link. That's how their system survives. So that is their profitability. Basically, it's not in dollars. It is their own native tokens, and who are getting it's participating in their network, and they kind of distribute those in form of yields. That's how there's, like, if you staking is one example. Like if you participate in their do something for the Chainlink protocol, and they would distribute some kind of a rewards to you, and that will be part of your kind of a yield there. I don't know if that answers this question, but DeFi growth, right? You can see this DeFi, the total DeFi, they call it as a total value locked. It is not market cap in DeFi world. It is like how many values locked in the DeFi. And you can see this exponential growth. I just wanted to show this how this area is exploding. With all these issues we talked about, right? Not everybody is convinced, but people participating. It is kind of exploding in this area. And this graph is for all the blockchains, not just Ethereum. All the blockchains there. Their DeFi Llama is one of the good website I found to look at the DeFi analytics, and it's currently, as of day 4 yesterday, I looked at as $223 billion locked there.
So this doesn't include Bitcoin, right?
Bitcoin, some of the DeFi protocols include the Bitcoin is part of that. So Bitcoin does not have its own DeFi world, but let's take one example here. Okay, so they call something called liquidity mining. Okay, so what it is, right? So if KuCoin or if I come up with another exchange tomorrow, let's take one X exchange, right? And I wanted to introduce X coin. What do? Right? I kind of borrow Bitcoin from you, Nari, and I'll give you like for one Bitcoin, I'll say I'm going to give you like I kind of swap you for like 1,000 X coins. Okay, that's how I create the liquidity here. So in that ways, that there are some Bitcoin value is also part of this total value locked is also there.
Okay, thanks.
Hey, Vetri, I have a basic question. I guess I'm missing some fundamentals here, but yeah, the KuCoin or the X coin or whatever, right? As far as I understand, okay, they're, I mean, what's the demand side of it, right? So they give those out for people who might deposit with them or might do some exchange with them. But who wants it ultimately, right? Why would I want it? What would I do with it?
Yeah, that's a good question. I also thought about that, right? But there are a lot of people participating in all these protocols here, right? They are the one who's generating all this. Let's take KuCoin, right? KuCoin is becoming popular now. People who are using that exchange instead of using Coinbase, people move to the KuCoin. That is how they generate. Like more people use the KuCoin. That generates a demand for the KCS coin. Okay, some of the yield forming protocols, they would kind of give there's something called airdrop here, right? So if they wanted to introduce a new coin, they would just look for the wallets there. They will just issue some coins to them, right? That is also another way of generating interest here. Sorry, generating demand. And there's multiple ways they have to generate. They create a liquidity pool, like swap coins between the very popular coin to the X coin, and they would give the yield. Some of the yield forms I've seen, they give like 100% yield. Basically, 100% is not on the Bitcoin. If you swap, if you kind of give provide the liquidity for that pool, and they would give like 100% returns on their coins. Basically, there are a lot of people are buying this. If you go look for DeFi protocols, you can see that there is like these are like sometimes I feel like it's the artificial demands are generated, but people still go back and go do this.
Right. So I understand, if you have like, a million KuCoins, you can deposit it and you'll get, sort of an interest in more KuCoins. But is that it? I mean, is the coin an end unto itself, or is there something else? Like if I wanted to say transfer money from here to India, can I use KuCoin to do that instead of, having to pay in dollars? Something like that, right? Does it have some real world utility?
Transfer India, people use Ripple. Ripple works in both places. They don't use KuCoin. I see people using the XRP one to do transfer XRP to India. I don't know how they do it, and I know people have done that. And eventually, right, so people in the crypto world want to spend this KuCoin itself, all this money. Now, we have all this crypto Visa cards and Coinbase Visa cards, which technically you can use your cryptos to buy milk or use groceries and everywhere, right? So that means it gives an option to use your fiat, or it gives an option for given. So that is kind of a first step towards using these coins to your real world, buying real world things. But eventually this will evolve. When Bitcoin is being accepted in the stores, right? Let's say in down 2 years, they will slowly expand that to maybe Litecoin, maybe other coins will be. Not every coins will in this world will be in the DeFi world will be accepted, but at least the very popular one will be accepted, and some of them will fail, right? So there will only like few one will survive, in my opinion, in another 2 years. Not everything will survive.
Vetri, you talk about Visa and Mastercard. That seems very counterintuitive, right? You have the money, you convert that into crypto, and then you put that on a Visa rail, which again converts it into cash. And every time you do that conversion, you lose some money, right? In the fees, ramp on, ramp off. So what is the point?
So let's take this example. Yeah, this is a good example here. Let's say if I buy, so the crypto example, it's a crypto example, right? So crypto has a CRO as a coin. Okay. Let's say I bought a coin. It's 0.19 or something. Let's say if I bought that CRO coins in 0.1, and it's double the value now. And what do I do with that, right? I got to use that, right? If I want to use that to, let's say, use that for my vacation, there will be some slippage there, but if I look at the money got doubled for me, and I can use my gain to go on vacation or something like that. So that's where I say, right? So there is inflation. This is inflation. That is your appreciation within the crypto world. And how do you use that appreciation to transfer back to your real world necessities? That is all individual. That's all up to the individuals. At this time, I'm not using my crypto as I'm using all my fiat currency, but eventually I'll be doing it when I think I've gained enough profits there. Any other questions?
I still have a basic question. So you're in one ecosystem, and by the time you get into fiat currency, any system allows you to go back to your fiat currency? Is it, or how does that?
Yeah, work? That is where your exchanges are there, no? Okay. So anyway, you need an exchange for trade any cryptos. Okay. Right. So exchanges allow you to convert back to fiat to crypto, right? And there may be some slippage. Of course, that is always there. You have gas fees there, and this one that is there. So if you get past that, then you should be able to convert it.
Got it. Okay.
So this is an example of two different ecosystems. We talked about Solana and Ethereum. This I saw it in one of the articles. I thought I'll put it here. You can see almost like you see the base layer here, both Ethereum and node infrastructure. We talked about it. I don't know what this layer to scale there. Have scaling mechanisms here. We talked about open, which is the options. Staking we talked about margin. There's asset management coming up. There is the prediction market. Prediction market is nothing but your kind of a gambling market here. So if you can predict who's going to win next election, that is kind of protocols around that. We talked about insurance, and we talked about stable coins here. That is there on the left, right? So all these things are kind of, and this is not the comprehensive list, right? So this is evolving. There's much more products in this. This is kind of, they have picked and choose some of the products here, and this is just to get an idea how this whole ecosystem looks like. All right, so this is like much more more risks here. These are the exploits I kind of looked at it. They have rug pulls. First 2 points, rug pull on the open source code. This is kind of, we touched this point before. What if there's a bug there? Somebody else find it. Rug pulls is like kind of inside jobs. They plan some of the protocols. They plan their own bugs within the system, and after they get popular, they kind of take the money away. Run. Looks like this has happened here. That happened in the past. It is a couple of things have happened. And open source code, we talked about it. Like, does open source code, if somebody smarter than who is developing it, able to find any hack, and they could be able to exploit it. And this one thing, I was reading an article. They are some of the DeFi platforms. They are kind of test the code in production. They put in production directly, then test it there. I mean, we have all done that like inadvertently, but looks like this is the culture in some of the DeFi protocol companies. And sloppy coding and insufficient audits there. So you can see this from here. Let me go back here. So you can see this, right? So there's a layer on top of the layer on top of the layer. It's there. There is like, it's like, how do we even do an audit on this whole stack, right? Some protocol is using Zapper. I'm just making this a blending open and the whole thing, right? You have multiple layers here. How even go and find any bug here, right? So that is, auditing is very difficult, right? That's why I said there's insufficient audits there. I want to come back to the flash loans, the Oracle attacks. There's Oracle we talked about, right? Where is Oracle here? There's Oracle here. We talked about that. So what if Oracle is not working, right? There's something hacked at Oracle. If it is not giving you a right Apple price here, your whole protocol is, depending on this price, that is going to mess the whole protocol there. Huh? There is Oracle attacks and exploits during the flash storm. This is something I read it, right? I don't know how this works. They say this is an uncollateralized loan, and you can get a loan when the block is starting, and you got to pay the loan back before the block is getting closed, like within a week or so. So a lot of people kind of take this loan. Some people have taken this loan. They've used the arbitrage to move the money around, and looks like there's this big hack happened this couple of times. I really don't know how they would do this flash loan, right? Without collateralized, you can borrow some money, you can borrow $1 million when the block is starting, and before the block is closed, you're supposed to pay back that $1 million, and you don't have to pay any interest rate or something like that. Interest or something.
The perfect storm can happen here in other ways too, right? Like if a lot of people default, that's also a perfect storm here, right? The whole thing will go.
Yeah.
Okay.
All right. This is all I found. There could be other exploits there.
All right.
Okay, I put the Miloform link here. And this is another group, Telegram group. I'm part of it. This is where I learned it. Like I've started Bitcoin in exactly this January. That's when I started to know about Bitcoin. And this group is a very knowledgeable group. I can put it there if you want to join, if you want to learn. And there's like a lot of knowledge. I mean, the Miloform owner is part of this group. He kind of runs this group as well. So if you want to join and if you want to discuss with them, you can ask all these questions. They will be giving a different perspective. There are a lot of more knowledgeable people out there. All right, that brings us to the end of this presentation.
Hey, Vetri, can I ask you a question about development? If I want to do a development of a system,